The point is, why does the interest rate need to be where it is roughly at the moment? And it doesn't need to be exactly where it is. Don't get me wrong, there's still flex either way. But why? Because of inflation. Because we've had inflation, and we haven't had inflation from a good cause. Good inflation, really simply, I would describe as inflation that happens because an economy is overheating. There's too much trading going on. There's too much money zooming around the economy being spent on things. That sounds a bit silly when you think about it, but what it leads to is bubbles, aside from anything else. Too many businesses started, too much money borrowed, too much money lent to people or companies that can't necessarily afford to pay it back or aren't covenants, right? So how do you put the brakes on that if you're the central bank? If things are functioning relatively normally, you put the interest rate up because it costs more money to borrow money, right? And that's roughly why we are where we are today. But just to put it to bed one more time, the easy money era, it was easy. I remember in 2021 getting some mortgages that are sadly dropping off this year at things like 2.8% in a limited company on a 5-year fix. Sad day when that comes to be refinanced. Now, obviously, we've gone like that, and then we've come back down a bit. But where we are, at roughly 5.5% for limited company buy-to-let, roughly 4%. There are some mortgages that are a bit better for your home residential mortgage, 3.75, something like that. That's basically where we are.